What is up, my friends? So, a quick little, just a reminder, I will be doing a live stream on the 4th of July. That will be my beer review of Sierra Nevada Torpedo. So, my friends, we have monthly paint stocks. Okay, we have the quarterly dividend paint stocks. We already know that. We have the weekly paint stocks. We also have ETFs that pay twice per week, which is QLDY. QLDY, yeah. So, my friends, quickly, this is not financial advice. Your money, your problem. Your money, your reward. So, my friends, there is a new stock ETF that pays daily. So, the ticker is SATA. So, it says here credit to Google. Strive raises capital through stock offerings and uses the proceeds to purchase Bitcoin and fund operations. So it says here that SATA pays a high annualized cash dividend, right around 13%, and is the first listed security in US markets to pay out these cash yields every business day instead of monthly. So, my friends, our prayers have been answered. Okay, the quarterly, nice, very nice. Monthly, nice. Every week, nice. But let's be honest now. We have tried the whole structuring our portfolio so it's Monday, Tuesday, Wednesday, Thursday, Friday. Correct. Where you get paid with dividends every single fucking day. Correct. So it was just a matter of time before this actually actually manifested. Fucking look at me with that word. Mani- Manifest. So our prayers have been answered. So it is currently going for, let's check the price real quick. SATA stock price is $98.94. So let's look at the maximum spread. So the maximum spread, so it started in November 2025. So if you fast forward to now, it is up 12.19 points. So it is at $98.94. But you had to factor in the fact that this is a ETF that pays daily. So with it having to do with crypto, that means that it will be extremely volatile. Correct. But with it being $98 right now, so I guess if you guys really want to try, you could go ahead and try it. But then just really be on your toes with this. Okay, because every time you get paid out, that means that the value will drop. Okay, the weekly, especially the higher yields one, for example, like Granite shares, within I think it's up 400%. 400%. Let me see. Koi dividend yield. Let me check real quick. I think it's at 400. Is it 400? It is 390% and 405%. That is fucking outrageous. Okay, so okay, my friends, what did I tell you? Okay, my friends, what did I tell you? Do I still have my koi? Yes, but that is only because I already made my money back. Why am I going to sell it? The whole nav dipping rule isn't that bad, but it just recently went through a reverse split. So it went back to, see, the high point was around $19. I thought for a fact that it went up. Boy, let me check the price real quick. I'm pretty sure that it went as high as like 20. See, yeah, yeah, 1 month spread. So 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 as soon as the reverse split hit, so it went back to like 24. Now it's back down to 19. My friend, it's going to keep tanking. You cannot have you cannot have a dividend yield of over 100. 200, you're just crazy. 300, you're a fucking lunatic. 400, outrageous. So my friends, this is strictly for income, but when you have something like koi, you need to factor in big time NAV erosion if you have multiple securities like this. Okay, because I'm gonna show you that one more time. It says right here. Um, as a matter of fact, I want to show you my actual Fidelity koi numbers. Okay, so I want to hear from you guys. What is your investing strategy right now? So are you going more towards income, the hybrid investor? Are you trying to go for growth mainly? So I want to hear from you. Plus, will you be buying the SpaceX stock? Okay, my friends, will you be buying the SpaceX stock? So let's see. Let's check out the koi stock real quick. Because I mean, you're going to be fine, and as long as you don't have too many of those securities, you're going to be fine. Your NAV won't suffer that much. But if your whole portfolio is mainly structured around the higher yield picks, you're going to get fucked, man. I'm telling you now, you're going to get fucked royally. So let's see. The official yield for koi. Let's see. It is. Let me switch to a dividend view real quick. So the official yield is 405%. That is fucking crazy when you factor in. I also have blocks, which is 40%. That is peanuts compared to koi. But just to let's see, I also have Misty. Misty is okay, my friends. This is just to put it into perspective how crazy koi is. Misty Misty was looked at as, oh fuck, oh my god, if you get Misty, man, you might as well go jump off a bridge without a parachute. See the alligators there? See the alligators there? You're better off jumping into that and becoming some some human little treat for the croc. Okay, my friends, for the gator, you're better off doing that. Misty is 241%. Okay, that's the dividend yield. Koi Koi is 405%. That is fucking outrageous. Excuse me. Okay, but then you have your monthly pairs. Some of my favorite, like a safer one, like Jeppy. That's at 8, and you're gonna be fine with that. Then of course you have QQQI, one of my favorites, 13. Do you remember when 10% yields were like, oh, oh, wow, wow, buddy, buddy, what's going on, buddy? God bless modern times, huh? God bless modern times. So, Koi, once again, this is not financial advice. Your money, your problem. But man, that is just crazy. 400. So it went from 300, dropped down to around 200, but now it's back at 400. That is crazy, man. But I gotta tell you, man, when you receive those dividends, it is addicting. But you have to be careful not to fall into the trap of, oh, I gotta keep chasing these higher. No. So if it is for investing, fine, fine. But you also don't want to be stupid. You do not want to tank your portfolio. Make sure to pick quality income ETFs, my friends. All you have to do is do your research, leverage. Okay, you have to do your own research on those terms, the synthetic calls, the underlying stocks, because just because something's named after, for example, let's say there's a company which there isn't, Boob. Okay, my friend, let's say there is a company named Boob. Okay, so a ETF comes out called Booby. Okay, you buy it. Lo and behold, you actually read the the outline of what the ETF does. Lo and behold, and it says that it necessarily doesn't really the underlying stock really isn't Boob. It's something else. You're not getting real exposure to that company. Okay, so that's why you have to do your own research. Just because something somewhat matches the company name, you have to do your own research in finding out does it actually hold underlying stock of that company. Okay, but then leverage, there's also long, short, two times leverage. So that's why you have to really do your own research, which I guarantee you will fall in love with it. Okay, my friends, you will fall in love with it, and it's going to be crazy because you're going to start looking at everything as, oh man, I could have made money with that dollar. Man, that was $5, man. Oh man, I went out. Man, I could have saved that money. I could have invested that money, man. Oh my gosh, I took that girl out that never called me back. Stupid bitch. How could she? Wasted that money. I could have put that money into investing and I could have actually made more money versus getting absolutely no play. So it really does shape your mindset. So yeah, that's all I got for you guys. So our prayers have been answered, but are you willing to take on the risk? So the ticker is SATA and it pays daily. Wow. So that being said, make sure to like the stream, follow me here, my friends. Let me know where you'll be buying the SpaceX stock and what is your investment strategy. What ETF have you been looking at, or what stock have you been interested in? Okay. So that being said, my friends, I hope you have a lovely Saturday. Stay safe out there, my friends.